You heard about crypto exchanges, places where you can swap cryptocurrencies? But did you hear about number one exchange in terms of volume? We are talking about Binance, of course, and that exchange has its own cryptocurrency called BNB, or Binance Coin. Today, we will explore entire bumpy history it had to endure in order to establish itself within top 5 cryptocurrencies. And if you don't know anything about crypto, I got you covered, because every video on Bitcoin Academy is 100% beginner-friendly. All right, let's start at the very beginning. The story of Binance begins in July 2017, right in the middle of one of crypto's wildest bull runs. A man named Changpeng Zhao, or simply CZ, launched Binance after raising $15 million through an initial coin offering, ICO. At the time, crypto exchanges were slow, clunky, and poorly designed. CZ saw a gap in the market and built something better. A fast, user-friendly platform that worked across multiple languages and supported dozens of cryptocurrencies. Alongside the exchange, he also launched Binance Coin, known by its ticker, BNB. This token first lived on Ethereum as an ERC20 token, with a maximum supply of 200 million coins. In the beginning, BNB's main use was simple. If you used it to pay for trading fees on Binance, you got a discount. But that one small feature sparked a big idea: the start of a token-powered crypto ecosystem. In just a few months, Binance exploded in popularity. Its combination of low fees, constant updates, and a growing list of supported coins helped it become one of the biggest exchanges in the world by trading volume. Traders loved the speed and the deals. Investors started speculating on BNB's potential, seeing it not just as a discount token, but as a way to share in Binance's success. CZ also introduced a clever mechanic. Every quarter, Binance would destroy a portion of BNB, permanently reducing its supply based on trading activity. This deflationary model gave BNB even more value over time. By the end of 2017, what started as a simple ICO project had become a cornerstone of the entire crypto world. Binance wasn't just an exchange, it was quickly turning into a brand, a platform, and a movement, and BNB was right at the heart of it. After Binance's explosive debut, the team wasn't interested in just running an exchange. They wanted to build an entire blockchain ecosystem. So in 2018 and 2019, they began expanding what BNB could do. One of the first major moves was the launch of Binance Launchpad, a platform for hosting initial exchange offerings, IEOs. These were new crypto projects that raised money directly on Binance, and the only way to participate was by holding and using BNB. This gave the token real utility and sparked new demand. But the biggest leap came in April 2019, when Binance officially launched its own blockchain, Binance Chain. Up until then, BNB had existed on Ethereum, but Binance wanted more control and performance. So they created their own high-speed chain and migrated BNB over to it. This new chain wasn't made for smart contracts like Ethereum. It was built for fast transactions and powering a decentralized exchange, DEX, known as Binance DEX. On this new chain, BNB played a central role. It became the gas token used to pay transaction fees. To further strengthen BNB's value, Binance also implemented quarterly token burns, using a portion of profits to permanently remove BNB from circulation. This deflationary strategy added scarcity over time, which many saw as bullish. Meanwhile, Binance kept adding features to its core exchange, including margin trading, futures, and new fiat gateways, and in each case, BNB played a role. Whether for discounts, staking, or trading utility, BNB was more than just a coin. It was the fuel for everything Binance was building. By the end of 2019, Binance had proven it wasn't just riding the crypto wave, it was shaping the entire landscape. And BNB was evolving from a simple fee token into the heartbeat of a growing ecosystem. In 2020, Binance took its next major leap, and it changed the crypto landscape all over again. In September, they launched Binance Smart Chain, BSC, a smart contract platform that worked alongside the original Binance chain. But this time, BSC was designed to be fully compatible with Ethereum, meaning developers could easily migrate their apps without starting from scratch. What made BSC stand out wasn't just compatibility, it was speed and cost. Ethereum had become slow and expensive during the DeFi boom, with gas fees soaring into the hundreds. In contrast, BSC offered lightning-fast transactions and fees that were just a fraction of a cent. And powering it all? BNB. On BSC, users needed BNB to pay for every transaction, making it the essential fuel for this entire new ecosystem. The timing couldn't have been better. DeFi, short for decentralized finance, was exploding. New platforms for lending, borrowing, and trading without intermediaries were popping up everywhere. BSC attracted a wave of these projects, including PancakeSwap, which quickly became one of the biggest decentralized exchanges in the world. Yield farming, staking, liquidity pools. BSC became a playground for crypto users seeking returns, and BNB's value surged as a result. By the end of 2020, Binance Smart Chain was one of the busiest blockchains on the planet. It had become a viable alternative to Ethereum, especially for users in regions where high fees made crypto inaccessible. And behind that success was BNB, now serving as gas, collateral, staking asset, and governance token across the entire BSC ecosystem. What began as a way to save on trading fees had transformed into one of the most used tokens in crypto. Binance had built a full-stack ecosystem, and BNB was at the center of it all. If 2020 was the year Binance built its empire, then 2021 was the year it took center stage. As crypto markets exploded into a historic bull run, BNB became one of the biggest winners. Starting the year around $40, BNB skyrocketed to over $600 by May, cementing itself as a top 3 cryptocurrency by market cap. The world started noticing. What drove this meteoric rise wasn't just speculation, it was utility. People were actively using BNB for everything. Trading fee discounts, DeFi transactions on BSC, staking rewards, NFT purchases, and token launches through Binance Launchpad. The Binance ecosystem had become a massive economy of its own, and BNB was the native currency fueling it all. But with fame came attention, and not all of it was good. As Binance became the largest crypto exchange on the planet by trading volume, regulators around the world started asking tough questions. Authorities in the UK, Japan, Germany, Canada, and other countries began issuing warnings, investigating Binance's operations, or outright banning certain services. The main concern? Binance was offering complex financial products like futures, margin trading, and staking without clear licenses. And while Binance claimed to be decentralized in spirit, its structure raised eyebrows. It was global, yet hard to pin down. Its headquarters? Technically, none. Meanwhile, Binance Smart Chain came under fire as well. Critics pointed out that while BSC looked decentralized on paper, the validator set was small and tightly controlled, with Binance retaining influence over who secured the network. This raised concerns about centralization and transparency, 2 big no-nos in the crypto ethos. Still, users didn't seem to care. BSC remained fast, cheap, and easy to use. And BNB? It held strong, becoming a symbol of Binance's dominance in the crypto industry. But under the surface, the pressure was building. Binance had become too big to ignore, and regulators weren't going to ignore it much longer. By 2022, Binance was firmly in the spotlight, but it was a double-edged sword. On one hand, Binance had become an unstoppable force, with BNB deeply embedded into every corner of the crypto economy. On the other hand, regulators weren't just watching anymore. They were taking action. Countries like the US, UK, and several in Europe began increasing legal pressure, demanding more transparency from Binance and questioning whether it was operating within the bounds of local laws. Binance had to adapt fast. In response, the company began changing its structure, moving away from a one-size-fits-all model and instead setting up regionally compliant entities. Binance's strategy was clear: cooperate where possible, retreat where necessary, and keep innovating globally. Amid the legal reshuffling, the BNB ecosystem kept expanding. Binance Labs, the investment arm of Binance, poured capital into emerging Web3 startups, DeFi platforms, and NFT projects, all of which integrated BNB or deployed on Binance Smart Chain. In fact, BNB Chain became the new umbrella brand for Binance's blockchain ecosystem, merging Binance Chain, the original, and Binance Smart Chain into one unified narrative. The goal was to push BNB beyond trading into gaming, metaverse, decentralized identity, and real-world applications. NFTs took off on BNB Chain, with platforms like Babylon's NFT marketplace and GameFi projects gaining traction. Even in the face of fear, uncertainty, and doubt, or FUD, BNB stayed strong, consistently ranking among the top 5 cryptocurrencies by market cap. While legal challenges dominated headlines, the user base continued to grow, especially in Asia and Latin America. This was a pivotal year. BNB was no longer just a utility token for trading fees. It had become the backbone of an entire ecosystem. But with mounting pressure from regulators, the question remained: could it survive the storm that was coming? In 2023, Binance faced what many called its biggest existential threat yet: a full-scale assault from US regulators. In June, the U.S. Securities and Exchange Commission, SEC, filed a sweeping lawsuit against Binance and its founder, Changpeng Zhao, CZ, accusing them of operating an unregistered securities exchange, misusing customer funds, and failing to comply with U.S. laws. To make matters worse, the Department of Justice, DOJ, began its own investigation around the same time. For the first time, Binance wasn't just facing fines or warnings, it was facing a direct attack on its core business model. The lawsuit shook the crypto world. Among other things, the SEC listed BNB as a potential security, which raised a major red flag. If courts agreed with that classification, it could force exchanges to delist BNB in the US, limit its use in DeFi protocols, and trigger ripple effects across the Binance ecosystem. Already, Binance US, the American arm of the company, had to reduce or pause several BNB-related services, including staking and certain trading pairs. Despite the chaos, Binance's global business continued operating, especially in regions less influenced by US regulations. And while the legal headlines caused short-term price volatility for BNB, the token remained widely used across the BNB chain, in DeFi, and for payment integrations around the world. Some investors even viewed the legal pressure as a buying opportunity, believing that Binance's size and influence would help it survive. But the concern was real. With the SEC, DOJ, and other regulatory bodies circling, the long-term legal status of BNB hung in the balance. If labeled a security, the impact could be massive. If not, BNB might emerge stronger than ever. But 2023 was the year the fight truly began. By the end of 2023, Binance's legal troubles reached a dramatic climax, and so did the reign of its iconic founder, Changpeng Zhao. In November, after months of negotiations, Binance reached a historic $4.3 billion settlement with the U.S. Department of Justice. It was one of the largest penalties ever issued in the crypto world. As part of the agreement, CZ agreed to step down as CEO, marking the end of an era for the company he built from scratch into the world's largest crypto exchange. The DOJ's investigation found Binance guilty of failing to maintain adequate anti-money laundering (AML) controls, violating sanctions laws, and allowing illicit actors to move funds through the platform, while Binance did not admit to misusing customer assets. A critical distinction compared to the FTX collapse, the settlement sent shockwaves through the industry. The takeaway was clear. Regulators were no longer tolerating gray zones. CZ's departure wasn't just symbolic, it was a turning point. In his place, Richard Teng, a former regulator and Binance's head of regional markets, took over as CEO. His appointment signaled a clear shift toward compliance, transparency, and a more grown-up version of Binance. Teng's mandate was to stabilize the ship and guide the company through its new regulatory reality. For BNB, this leadership transition carried weight. While CZ was often seen as the face of both Binance and BNB, the token's core functions remained intact. It was still being used to pay for trading fees, access launchpad events, and power activity across the BNB chain. The settlement offered Binance a chance to reset and prove it could operate within global regulations. But for the BNB community, one question remained. Without CZ at the helm, could the ecosystem continue to thrive, or would BNB's fate be tied too closely to its founder's legacy? With regulatory dust beginning to settle and new leadership in place, 2024 marked a pivotal year of rebuilding and redefining the BNB ecosystem. Binance took strategic steps to separate its centralized exchange business from the development of BNB Chain, a move aimed at demonstrating greater decentralization and reducing regulatory risk. This distinction helped clarify that while BNB remains central to Binance's infrastructure, its blockchain ecosystem has ambitions and momentum of its own. BNB Chain, now formally recognized as a combination of the original Binance Chain and Binance Smart Chain, doubled down on technical innovation. Developers focused on improving scalability and usability by launching Layer 2 solutions, enhancing EVM compatibility, and even experimenting with AI integrations. These changes were designed not only to attract more developers, but also to compete with other leading smart contract platforms like Ethereum and Solana. The BNB Smart Chain remained one of the most active blockchains in the world, with millions of daily transactions. Despite past criticisms about centralization, its performance and affordability continued to attract dApps in DeFi, gaming, and social finance. Binance Labs, the venture arm, kept fueling this growth by investing in projects that aligned with BNB's utility-focused vision. Perhaps most importantly, Binance and BNB Chain both increased focus on emerging markets. From Africa to Latin America and Southeast Asia, adoption grew as users tapped into low-cost trading, token swaps, and blockchain-based financial tools powered by BNB. These regions, underserved by traditional banking, became a proving ground for BNB's global relevance beyond speculation. In 2024, BNB Chain wasn't trying to be flashy. It was focused, fast, and functional. It rebuilt trust with developers, attracted real users, and proved that even under pressure, the ecosystem could evolve without losing its core utility. As we arrive in 2025, BNB remains firmly in the top 5 cryptocurrencies, still acting as the beating heart of the Binance ecosystem. Its utility is undeniable. Users pay trading fees with BNB for discounts on the Binance exchange, use it as gas on the BNB chain, stake it to secure the network, and participate in governance for certain dApps and protocols. In many ways, BNB has become more than just a coin. It's an infrastructure layer embedded in one of the most used crypto ecosystems on Earth. But this year also presents a key question. Can BNB thrive without becoming a legal liability? While Binance has made strides to distance itself from past regulatory troubles, including CZ stepping down and compliance reforms being implemented, the threat of BNB being labeled a security in the US still looms. If that happens, it could limit its availability on major platforms and trigger further scrutiny. Despite these risks, BNB continues to expand its presence, especially outside Western markets. In countries like Nigeria, Brazil, India, and the Philippines, users interact with BNB daily through remittances, token swaps, payments, and decentralized applications. It's even supported by Visa debit cards, allowing people to spend BNB like cash in the real world. These use cases give it staying power, even if regulators in the US grow stricter. Still, critics argue that Binance maintains too much control over validator sets and token economics, especially the quarterly burns that reduce supply. While the chain is technically permissionless, skeptics say true decentralization is still a work in progress. So is BNB a utility powerhouse or a ticking legal time bomb? The answer depends on how the legal frameworks evolve, how decentralized the network becomes, and whether Binance can convince the world that BNB is more than just an in-house token. One thing is certain, BNB isn't going anywhere, but its future will be shaped by more than just code. And with that sentence, we conclude today's video. If you wish to continue your crypto education, make sure to watch one of these 2 videos you see on the screen right now. And if you found this information helpful and valuable, make sure to like, subscribe, and comment your thoughts. Best of luck, and see you in some of my next videos.